Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. My name is Pushpendra Mehta, and my guests for today are Jack Large, editor of CTMfile, and Craig Jeffery, managing partner at Strategic Treasurer. Welcome to the Open Treasury podcast, Jack and Craig. This week, we are focusing on 7 stories that cover 6 themes, namely central bank digital currency or CBDC, recession, payments, fraud, supply chain, and finally cash management. You can read these articles and also research content more deeply by visiting ctmfile.com or by following the links in our show notes. Let's begin our discussion with the first story that pertains to central bank digital currency or CBDC. The Central Bank of Norway has officially stated that the prototype infrastructure for Norway's central bank digital currency will be based on Ethereum technology. The announcement coincides with a recent report by the IMF indicating that 97 countries, or more than half of all global central banks, were currently investigating or establishing CBDCs as of July 2022. The Bahamas became the first country in the world to adopt a CBDC in October 2020. This was followed by Nigeria, which launched Africa's first CBDC in October 2021. The Caribbean nation Jamaica is the latest country to launch a CBDC. And among the world's biggest economies, China has become the front runner in developing a CBDC, which is set to expand in 2023. Of the 19 G20 countries that are exploring CBDCs, 16 are already in development or pilot stage. This includes South Korea, Japan, India, and Russia. Each has made significant progress over the past 6 months. While nations around the world are making significant strides in the development of CBDCs, considered the digital future of money, CBDCs may face significant global interoperability and integration problems, as well as privacy issues in the near future. Craig, if I may start with you, what are your thoughts around the development of CBDCs, the announcement by Norway, as well as the 2 important aspects or concerns around CBDCs, which is interoperability and privacy?
Push, I'm afraid I don't have too much that's very interesting there. I mean, the privacy issue is one where we've seen concerns about visibility into that across the board. And the other side is complete anonymity, which is used by criminals. So the ability for a central bank or a bank to be able to know who they're dealing with is crucial. So balancing between those two going to be a long-term focus for the solution, because it can't be the extreme on either end, I don't think. The interoperability question that's an ongoing issue of global payment mechanisms. How do you interoperate in an open treasury environment? The ability to solve that is, I think we're in very, very early days for that in terms of making that work. I guess this is just another, central bank, Norway, pushing forward with, central bank digital currency, following a number of countries that are already out there with it. Some surprising first movers in this space. To me, this is just an area we continue to watch from the corporate perspective to see how this is solved. But from a central bank perspective, we think CBDC is a stronger play than some of the more, let's call them anonymous type methods for corporate use.
For me, the most interesting thing about this is it is the beginnings of a complete revolution of payment systems, and the replacement of SWIFT. If the IMF make these CBDCs work, the interoperability, and all of a sudden we get a whole new game of managing liquidity and managing cash as a whole, and things like foreign exchange, what happens to them and so on. is there going to be interchange between foreign exchanges or the currencies? Are they all going to be the same? It's fascinating. But you're quite right. It's going to be a long while, and we're going to spend a lot of time ruminating about it. The fact that you've got less progress than the US and the UK is only marginal, and we're starting to see developments underneath the surface in the Bank of England, which is really quite significant, but you can't see them yet. And I'm sure that's happening around the world. So if I was a treasurer, I would keep my finger on it, just keep poking as to what they're going to be developing. And when you learn enough about it, you need to have your opinion recognized and your input recognized. To allow the central banks to do this anonymously and on their own is not a good idea.
You know, the idea that if we add another currency that will end all currencies, it always seems like that just adds one more element of complexity. Whereas some of this activity with central bank digital currency it's still using the currency of a particular country. And then you're still dealing with the FX, but you haven't introduced another complicating factor. I don't know, just interesting things to look at.
Interesting things to look at. And, our next story is about the elevated risk of global recession in 2023, as per the World Bank. With a comprehensive new World Bank study titled, "Is the Global Recession Imminent?" the World Bank joins those anticipating a global recession as central banks around the world raise interest rates simultaneously to mitigate persistent inflation. The study indicates that the world's three largest economies, the US, China, and the Eurozone, have been gradually decreasing dramatically, and even a mild setback to the global economy over the next year could send it into recession. Jack, if I may start with you, do you concur with the World Bank's opinion that there is an elevated risk of global recession, not just regional recession, in 2023?
Absolutely. I think it's inevitable given the current tools and the way all the central banks around the world in different ways are increasing interest rates. There's no other solution that they seem to be adopting. I think the global recession is inevitable. Combined with the problems of the war in Ukraine and the ramifications of that, I can't see anything that would get us out of it.
This idea of concern about recession in these three areas. I mean, the U.S. is in a recession. There's a difference between what politicians may say or put forth prior to elections, et cetera, but the U.S. is in a recession. And I think we need to look at the economic models for that. What level of recession is it in? What level will it be in? Is it light? Is it going to be more moderate, or is it going to be deeper? I think those are the areas we need to look at. The U.S. is definitely there. We're using metrics and measurements that are always backward looking. And so we're driving by looking through our rearview mirror with this. I mean, this is the economic conundrum, is we're always looking there. I think we need to assume we're there. And the question is how deeply will we go in these three large regions, China, Eurozone, and US? I think the assumption is we're flat at best, maybe in a recession in these. And is pessimistic going deeply or going to moderate level? I mean, as Jack said, there's what would prevent us? There's so many items moving in that direction to push us at least deeper into a recession. I think we'll find out about that more, but this is just an area of, it's not deep now, but there's a lot of headwinds and cross currents. And the central banks, for example, they're playing catch up on the interest rates. They've been doing that for a while, but we expect a 0.75% increase in the US soon, or at least that's becoming the most common view. So they're trying to correct things and catch up. But, certainly in the US, we put a lot of pressure on demand, which tends to drive inflation and create some other challenges that can lead to recession. So we'll have to see how this rolls up.
If I was a corporate treasurer at the moment, I would be very suspicious of any forecast increase of our sales. I would ask why, where, how are you going to achieve this? It has to be something completely new, I think, to be able to forecast increase in growth.
Yeah, I think that's wise, Jack. One thing that we see on the technology side, particularly in treasury areas, we see still robust activity on the use of technology in the area of risk and treasury visibility across the board. That hasn't slowed down at all yet. There's some little bright lights there in the midst of some of the storm clouds we see.
Very interesting analysis. Moving forward from the world of recession to another conundrum, which is about payments. The US and EU are reportedly placing pressure on Turkey, fearing that the country's banking sector could be used by Russia to circumvent sanctions. According to reports, the US has allegedly concentrated its efforts on Turkish banks using Mir, the Russian payment system. Brussels is also meeting with Turkish government officials to express its concern. Craig, if I may direct this question to you first, do you think Turkey's banking sector is a potential loophole through which Russia can try to evade economic sanctions?
There's always concerns that different methods will be used to circumvent different types of sanctions that are put in place. And so this is just another area that's being looked at. I mean, the Turkish economy is not doing well. There would certainly be some pressure there, but it doesn't take too long of a search to find penalties that have been assessed against different banks globally who have not followed money laundering or complied with sanctions or didn't follow sanctions, act as a money laundering agent of sorts. These are not minor fines that happen, and that's an extreme risk that banks can take if they're not careful there in managing that activity. So I have no idea if they're doing that, but the pressure is severe. And this is part of the conflict with Russia and Ukraine. Russia's attempt to form another payment system and get others to pull into its orbit. So this is just a natural skirmishing that's happening there.
Agreed. It's just an inevitable consequence of other conflicts, but it's also a consequence of the world economy under stress. And so what happens when they're under stress is payment systems themselves get managed much more closely. And this is just one example.
The next story is a piece that intrigues me no end. While there are heightened concerns of recession, small business payments have increased 11%, while card usage has increased by 13%, as per Bank of America's recent publication that reveals that small businesses continue to grow in areas such as credit and debit card spending, business travel expenses, payroll payments, and other aspects amid economic challenges. Craig, what do you make of these increases in small business payments and increase in card usage? Does this augur well for small businesses?
It is a positive sign for the card companies that the spending is going up, or certainly spending on a card is going up. That's certainly the case. This is a key area of card companies who term themselves payment companies. So this is, moving to that rail. So that's certainly the case. This whole return to travel at some level, at a diminished level, is certainly happening. I know in our business, we're traveling far lighter than at a far lower level than we used to, but significantly higher than multiple years of the pandemic. So some of this is coming back. It's not bouncing back all the way, but so from this depressed state, travel is an area where some of that spending is occurring. It's hard to say if those two things by themselves indicate it, that there's a benefit, but I think we're seeing an increase in travel, and we're not seeing all of the problems on the small business side that we see in certain countries. If the recession deepens, that could dry this up, but it seems like it's at least neutral to positive news from what I can see.
The small businesses are increasingly looking to increased efficiency, which is why they're moving to payment cards and the various additional payment systems that the bank card operating companies are offering. I don't think this is as significant as we think. I think it's part of a slow general trend in small businesses. The only question for me is whether there is any real new increase in demand, and I doubt it.
The next story is about a current fraud study in the US titled The State of Fraud and Financial Crime in the United States, conducted by Featurespace, an enterprise financial crime prevention developer, in conjunction with Payments.com. The study, which included more than 200 US financial executives from companies with assets over US $5 billion, found that US banks are experiencing significant challenges as they attempt to combat the increased number of cyber attacks while keeping their service available to customers. The survey respondents stated that fraud is becoming increasingly more prevalent and costly in their organizations, despite their efforts to mitigate risks. They also expressed concern that tighter security implementation might cause problems and make providing convenient digital access more difficult. Jack, does it concern you when you hear that businesses are reportedly hesitant to implement more cumbersome security measures regardless of the rise in fraudulent financial activities?
The key word there, Push, is cumbersome. What business needs is simple, easy to use, and actively prevent fraud. The businesses get furious when they are given systems from banks that are cumbersome and difficult to use. I don't think banks really understand how detailed the impact of some of these fraud control systems are. Having said that, we just need it more and more and more. It's just that we need easy-to-use systems. The face recognition, the biometrics is the way to go. Plus, and it's the AI-linked systems of review so they can work out that there's a pattern there. That's what's needed. Biometrics plus AI. And then we get easy-to-use, really fraud-relevant systems.
I think I agree with Jack 100% on this particular item. I think one other thing that seems interesting is a lot of times, things like multi-factor authentication, like, Jack was saying, whether it's your face or a code on an app or a SMS message sent to your phone, a number that you have to punch in. We've gone from the opt-in, if you're panicky, to it's highly recommended and you have to turn it down, to some of the systems for payments, it's not an option. It's like all of a sudden, please enter this code, or we're not validating your card or your cross-currency transfer or whatever the item is. So it's become much more standard. It's not even hey, we'd like you to add this. This is the minimum standard that we're willing to do business with. So I think that's a reflection of the environment and making it easier to prevent fraud and using the different tools. I agree completely with Jack on that.
For me, one of the beams of light here is that there is a new way emerging from Apple and others of doing passwords much more easily and much more completely. I look forward to that. It'll come out in the coming months, but it's the one beam of light for me.
One beam of light for you, and I hope this can stay that way. And you rightly said, move from being cumbersome to something more simpler and easier. Moving forward to our next story, which is about proposals issued by the European Commission that would allow it to intervene in markets and ask European companies to prioritize some orders over others during emergencies, have received a mixed reception, with critics suggesting their plan would introduce too great a degree of state intervention. The just published Single Market Emergency Instrument aims to avoid shortages, supply chain disruptions, and hoarding similar to those seen in European Union member states during the COVID-19 pandemic. Jack, if I may start with you, what is your opinion about European Commission's supply chain proposals, and do you think these are too interventionist, giving the Commission the power to steer industries in non-crisis times?
Business have got to get used to this. This is the beginnings of much more control by governments as we get not only the tensions from the Ukraine war or other wars, but also from climate change, where they are going to have to accept, businesses have to accept, they're going to have to do a business a certain way to minimize the climate impact. This is how it's going to be. It's not too much. It's more of the same is coming.
Yeah, I'm going to take a very different view on that. I think there's some elements of you need chips for industry or military defense. Those are good things for central planning activities to make sure that the sourcing of those is good. But there's different levels of interventionist activity, and the central planning of these items I've always experienced that the growth of, expanding supply, if prices rise, there's more ways to solve the provision of those materials. And that tends to do well. Every time it's controlled, every time we've seen it controlled, it creates artificial crisis, prices rise, then it becomes a black market. Philosophically, I don't see that as a good fit generally. I think there's a few cases where that can work in a crunch time. And I think we're entering the winter of a lot of challenges here, like Jack said with the war. But I would take a different view on that being positive.
The seventh story for today is about Kyriba, a major name in cloud-powered finance and IT solutions, announcing the launch of Cash Management AI, a solution based on artificial intelligence, which it says employs data science technology to predict cash availability with greater speed, control, and reliability. Craig, what do you think of the Cash Management AI launched by Kyriba, and can you summarize for our audience its likely benefits?
Sure. So Kyriba is one of the leading treasury management system providers and really an enterprise liquidity management solution set, right, with their supply chain finance offerings. So they're one of a handful who has been leveraging AI across a number of different areas of the system. So the focus on companies for forecasting has been very elevated for more than 5 years. And this is showing up in surveys and research we do from AP to AR and Treasury. And so this ability to use the power of tech to review data and make predictions can help and should help Treasury groups with their forecasting, especially since we're in an era where a significant minority of companies have to run multiple models and multiple scenarios. I think that's kind of the case. That's not so much of the story as I think their ability to add a confidence level that they would like tightening it up or loosening it up, right? The more you tighten your confidence level up, the broader the array of outcomes is. And so this allows you to say, I can move things in or out. I think that's really what I find most interesting there. It's, we like to think of there's an expected value. It's a point in time on a forecast, but there is a distribution. It may not be the nicely shaped distribution curve that we have, but the fact that they're allowing the user to say, I want a certain level of confidence. 1 in 20 times it falls outside this range, 1 in 10, 1 in 5. Those are useful tools that give more options to Treasury and liquidity management professionals.
Yeah, I agree with Craig that this, in a way, is a non-story in the sense that lots of different suppliers are using AI to get better understanding of the data within companies. This is a neatly packaged way of doing it, but the important thing is understanding your data more. And you can do it in different ways. These are 3 ways. There are other ways. But the key thing is you better understand your data much more carefully, because that's where the money is. That's where the returns are. And this is a good example of what can be done.
Finally, I would like to wrap up this conversation by seeking your opinion and your choice for the biggest or most important story of the past week and why. Jack, if I may start with you.
It's undoubtedly, for me, it's the IMF getting into looking at integrating the central bank digital currencies. If it anywhere near achieves what they're thinking of, it will transform world finance.
Yeah, I'm picking the article about global recession and elevated risk as per World Bank, their expectations in 2023. I think this is just one more series of economists pointing to this concern. I think that's just, something we need to be mindful of and act accordingly.
Yeah, I would concur with you, Craig, because I think with the cavalcade of challenges that treasurers have had to face over the last 2 years, recession is certainly not one of the other welcome challenges. So yes, I would choose the recession story as well. A big thank you to you, Jack and Craig, and to our CTMfile audience for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.